This is our Forex blog for April 5th, 2013, and I like to go over how you can use our currency indexes to find the best currencies to buy, the strongest ones, the best currencies to sell, i.e. the weakest ones. And one of the best ways of doing that is with our currency indexes. For years we've had currency meters where we statistically compare every currency to every other one for the dollar, the yen, the euro, the pound. And it's wonderful for showing statistical strength like you see here in the pound. That tends to continue. And especially it tends to continue when the daily, weekly, and monthly trends all line up. This is one of those times where when the pound is going up, it's going up against almost every currency, both in real time, both on the daily chart, or daily trend, weekly trend, which is in the middle, or monthly trend on the bottom. But nothing beats an actual chart, and you can see on the pound index right here the previous day's high for the pound index. When it breaks that, that's significant. It means the pound's stronger today than it was at any time yesterday. The hourly moving average is in gray. Above that it tends to go up. Below that you want to look and focus on sells. Obviously you would prefer to sell a currency that has a daily, weekly, monthly trend that's down. And when this breaks out here at 8:30 to the upside, you want to buy this pound against the weakest one. Well, guess what? The weakest one at that time is the yen from these four pairs. The euro's going up too at 8:30. The dollar's going down as well, but it's not quite as weak as you can see statistically as the yen. So, in a nutshell, you want to buy the pound yen. It's that simple. If you focus and continuously trade the strongest trending pairs, and it doesn't matter whether you use a 1-minute chart, 2, 3, or 5 that I'm about to show. You can use a 30 to 50 ticks per bar chart or a 5 pips per bar range chart. We're going to put the pound yen on here, and at 8:30, when you saw that trade, you get in relatively early into this move, and it went from 146.80 all the way up to 150. I mean, this is an astronomically huge 300 plus pip move. And the containment bands most of the time at the 2.0 white level contain price. If you zoomed out on this, obviously this exploded up the other day. Once that trend kind of slowed down, it acted as resistance, support. If you go back in time, you will see these 2.0 bands statistically contain price probably 70 to 90% of the time, depending on the day. And some days they work 100% of the time. But the point is, when it gets above this white line here, you know that the market's gone up a very, very, significant amount. I'm very careful buying a currency that's way above the upper band, and I mean 20 to 40 pips above. I'm very cautious. So if it's right above right here, or this little pullback right here, very safe place to buy. This little sideways range, anytime it goes sideways and doesn't pull back, it's pretty safe to buy. Anytime you get a decent pullback like this, and I would say a decent pullback when it's above the upper bands is, 35 to 50 pips. That's a pretty decent place to buy. And this is a relatively risky place to buy, but it did go sideways for 40 minutes. Sideways rectangle patterns tend to be, pretty high probability. And anytime you want to lower your risk of a trade, you can either trade smaller lots, or you can go from a 5-minute chart to a 2 or 3-minute chart, or a 30 to 50 pip tick chart, or even a 3 or 4 pips per bar range chart. So if you buy, you can just simply have a super tight 4 to 5 pip stop. And so if it doesn't work, you're out 5 pips. Big deal. If it does work, as you can see in this one, went from 149 to 150. If you want to take a shot at some of these higher risk trades, trade smaller lots and use faster time frame charts. But the point is, the currency indexes really make trading easy. And in fact, one way of practicing without risking your hard-earned money, click this button right here at the end, practice mode, and make sure all the charts have the same color, and when you scroll one of them back, they all move back. So you can see the pound, or the Australian here, went up to the point of control. That's the average price most traders have positions on. Can't get above it, and then it breaks down underneath the hourly. So from 6 o'clock onward, or 5:50, 5:45 onward, you're looking for sells in this. All the time frame trends line up. What would you trade it against back here when it broke the hourly? Well, as soon as the Swiss gets above the hourly, you'd want to buy that. The euro broke out above the hourly, and the daily and the weekly trend is strong. The pound is right at that level. If it soon breaks above, from below to above the hourly, again, above the hourly, you're focusing on buys. Underneath the hourly, you're focusing on sells. It's just a simple rule to keep you on the right side of the market. You are going to have losses occasionally, but they're going to be 3 to 12 pips max. And most of the time, you're going to lose probably 4 to 8 pips, somewhere in that range. And when the trades work, you're going to probably have 5 to 50 pip wins. You know, if you see one currency going up and another currency going down, you're going to make 20 to 50 pips if that trend continues. If one currency is going up and the other one's going sideways, you're going to get 5 to 20 pips. That's just the way it tends to work with this. So if you're watching a currency like the Australian right here at 6, you know, obviously focus on the ones with the longer term trends up. The euro and the pound. The yen is up earlier in the day, but you can see the weekly and monthly trend are down. So, you know, why mess around with that one? Focus on the pound or the euro. So at 6 o'clock, we're looking for euro Australian buys, pound Australian buys. And as you go forward, you know, you can see both of them are kind of going sideways. The euro is sideways, the pounds come back underneath the hourly. If you see one of the currencies you're in, like let's say the pound start to go down, if it's going down slowly and the Australian is going down rapidly, you're still going to make money by buying the pound Australian. That's the beautiful thing about this. If one currency doesn't really do what you expect it to do, but the other one does what you expect to do, if you're only really half right on picking these two pairs, you're going to still make money. For instance, at 6 o'clock right here, let's take a look at the pound Australian. 6 o'clock. Remember, we're looking to buy this. And, you know, secondly, looking at yesterday, this exploded up, kind of found resistance there, came down to the hourly moving average. It's kind of going sideways. If you were watching this chart, you really would prefer to buy kind of a breakout of this high right here. And you can see the lows are kind of finding support. Shouldn't go below that level. And so we're actually looking more closer to 6. So it's kind of going sideways here. We're going to really wait for a breakout of this high right here to go long. If it doesn't break out, you don't take a trade. And if it does break out, you put your stop right underneath this swing low right here, and you're risking a very tiny amount. Not in yet. The longer it goes sideways, the better. And sometimes, you know, the breakout doesn't happen, but it comes down to the hourly right here, and it finds support, can't really get underneath it, then you might want to buy here instead of up here. So this price is at 46.13 instead of 46.32. All right, so I might be in this trade right here, and put your stop underneath the swing low. You have your profit target of from here to here, the fib target. It's probably somewhere around 46.50 maybe. And anytime it kind of goes sideways, you can always move your stop up right underneath here. And you're risking super, super tiny, ridiculous amounts at this point. And if you get stopped out and it breaks out a few bars later above this high, you get back in. It's that simple. All right, so we get stopped out. We lost 5 pips. Big deal. 6, 7 pips. All right, and shot back above this level. Usually, if I get stopped out, I wait for this, you know, next bar to go higher. All right, so we're in here again. Very tight stop. Keep it where it is. All right, we got stopped out with another loss. And up to 8 o'clock here, let's take a look at this. We'll go forward on this. You can see, if you're watching the pound index at the time, the pound never, you know, never took off. So you probably wouldn't have even taken that trade if you were watching this. We're going to wait for the pound to actually break from below to above the hourly right here. 8 o'clock, it's going up. The Australian's going down. So 8 o'clock is a much better time to be looking for a trade. So we probably wouldn't have had that first trade. At 8 o'clock, it's, you know, it's entirely possible that we're in that trade, had a small loss. You buy the next breakout here, and like predicted, it exploded up. Now, anytime it's above these upper bands and our perfect oscillator is showing extreme highs, you got to be really careful. I would probably exit half my trade there and trail the rest. You know, with the trailing stop, we'd probably be out at 4,700 the other half, out at 46.84 in the first half. So your average exit somewhere around 90. You're in this trade at 36 right here. So huge win. And that's really the key. When one currency is going down against all pairs, and that's what this index is telling you. And again, you can use so many different methods of trading with this. You can have, you know, trend lines above here, and as long as it stays underneath the trend line, you're looking to sell it. You can also duplicate that trend line and put it underneath and project it off the lows, and it kind of gives you an idea of when to get out of this trade. Most of the time, unless currencies explode, when they go below that band, they kind of reverse a little bit. And this one just continued, but it gives you an idea when the market's super weak. You can use any time frame on this as well. If you don't want to use 5-minute charts, or if you want to go to a faster 2-minute chart, you can do that. Let's get rid of these trend lines on here. You can drop down to a super fast 2-minute chart and draw your trend line on this once it starts going again, and try to hit as many points as possible, or at least have it very close to them. And when it breaks that trend line, for the most part, usually that trend is over for the time being. It's going to have to get a little bit of a pullback up before it continues. Let's scroll back in time again. Now at this time, the Swiss, a little bit before 8, the Swiss breaks out and stays above the hourly. If you had traded the Australian against the Swiss, you probably wouldn't have had a loss in that first trade. You're going to sell this because the Australian's weak and the Swiss is strong, right around 8 o'clock, as I was saying before. And you can see this one, unlike the pound that you got stopped out first and you had to get back in, the first trade worked and it fell 25, 50, 75, 100 pips. Anytime it's underneath the lower band, you know, you really want to be careful. In all honesty, I would probably, when it stalls here, get out of half, somewhere in the middle here as it's chopping up and down. And I put my stop right here, and usually I draw my fib from here to here, and almost always the 1.618 is the max profit. If it stalls here, I'm going to get out of the rest of it here. It continued on below there, and I would have got out of my second entry, or my second part of my position right here when it broke that trend line, because it's so far underneath it. This is just one of those 1 out of 20 type trades, or 1 out of 30 type trades that you make, you know, 80 to 100 pips in. A huge win. You're in it up here, you're out of half right here, you're out of the other half right here, which means your average exit's somewhere in the middle. Your entry on this was right here, your stop would have been right above here. And what's beautiful about our systems is we're risking super tiny amounts. This is what we risk, and this is how much we end up making. You know, I'm just estimating 15 times bigger profit than your risk. Now that's a rare trade. You know, if every trade was 75, 80 pips or more like this, I'd have probably $5 or $10 billion right now. But the point is, occasionally you get these big wins. And you saw in the pound, you had a loss first, and then the second one worked. So let's keep going forward here. The previous day's high in the Swiss and the Euro. The pound broke out above the hourly and came back down, and then later on broke out. We also have a CAD here that's looking really weak. And notice the CAD, as I zoom in and go back here, it's underneath the hourly all day. So again, below the hourly, looking for sells. If you saw the CAD on there going sideways in a little rectangle pattern and it broke down through this trend line, at 8 o'clock, you want to sell that. And we know the Swiss was strong, as was the pound. Pound, Swiss, very likely at 8 o'clock. I'm sorry. Not the pound Swiss, Australian Swiss. We already showed that went down. And then the other one was the CAD Swiss. weak CAD, strong Swiss, 8 o'clock, boom, just collapsed. And what I meant to show on there was the pound versus the CAD. 8 o'clock, you had about 10 minutes, it was about 5 or 10 minutes into the 8 o'clock period here where it broke out. Just astronomically huge win. Obviously today's an exception rather than the rule. Most of the time when one currency is going down, the other one's going up, you're going to make somewhere between 20 and 50 pips. You're not going to get 100, sometimes 150 pips like some of the ones did today. So let's look at times other than 8 o'clock, because that was, it's just one of those things that was exploding up. Now when a currency, let's say the Swiss, is above the 2.0 band, you can, I would drop down to maybe even a faster time frame on one of these like this, 2 minutes. And we're looking for a trend line break, or we're looking for a fib target area. So this first move up, draw your fibs, and at this 1.382 level, we're kind of expecting the Swiss to run out of steam right here, 10:48, right before 11 o'clock here. So what currency is either likely to go up at 10:45 or has reversed down, or gone down too much? Well, the New Zealand was going down earlier and it's coming back up. 10:45, it's right near the hourly. If it breaks out over the point of control of the previous day, it's a good one to get in. You want to buy the New Zealand versus the Swiss. The Swiss is very likely to reverse here. 10:45, the CAD is down too much and it's been going sideways. It had every opportunity to make lower low for hours and it couldn't. So 10:45, I would say, if you're one of those traders that likes to do counter trend, if it's up too much to safely buy, and it's risky to buy way above the upper band. It is. Just most days you will lose money the majority of the time if you do that. Today is kind of one of those exceptions. But you want to look to sell the Swiss 10:45. This thing has gone down too much and it's not making new lows. 10:45, it's likely to go up. So we have the CAD Swiss 10:45 to buy. Here's 10:45, right? Somewhere in here, and we're just kind of waiting for price to go above the bar's high. You don't just at 10:45 buy this. You wait for it to break out over the previous bar's high. So at the earliest, you might be in this right here. You can see it went up from around 30 to 70. It's a 40 pip move counter trend. And again, you can go to any time frame chart, even the 2-minute chart, and you're going to get in at a better entry price. On a 2-minute chart, you're actually going to get in right here. So instead of getting in at 91.29, you're going to get in at 91.23. 6 pips earlier, and with a 6 pip smaller risk. And it's just that simple. And typically when these currencies are down this far underneath it, they're going to make a 2-wave move up. So when you see it go up and then go kind of sideways, typically what I'll do for counter trend trades is get out right here at this level right here, 91.67. And it might have went above that, but most of the time it doesn't. You can see it took many, many hours to get above that level. It's a key. The 1.382 for counter trend buys at the lows is a very good profit target off the first wave. And the fact that it wasn't able to pull back and hit the 38% retracement or 50% means it's very highly likely to hit the 1.382. So anyway, so many different ways of using the currency indexes, both for trend and for counter trend. Don't be afraid to do counter trends, because if you lose 5 to 10 pips when you're wrong and you make 20 to 50 pips when you're right on counter trends, you don't even have to be right half the time. If you're right 40% of the time, and keep in mind, some trades that start to go your way, you move your stop to break even. If you get stopped out at a break even, it doesn't count as a win. So that's going to lower your winning percentage. You could be 40% winning and have 20% break evens and only lose 40% of the time. So if you win 40% of the time and you make 20 pips, you lose 40% of the time and you lose 6 pips, guess what? If the rest of the time you broke even, you made a lot of money trading. And that's the key. Focus on that. Don't worry about winning percentage. It's bullshit. Focus on bigger wins and losses and try to be right as high a percentage as possible, but factor those break-evens in your analysis, because if you don't, you're not going to have the right, if you have a ton of break-even trades, your winning percentage doesn't have to be over 40% to do well.